Yes, okay, so let's move on to a new subject. So, which candlestick haven't I taught you? Please mute your microphones because we have an echo situation here. Okay, so in here, this candlestick, exactly this one, it has a long upper shadow and a small lower shadow, and the body is smaller than the shadows, and it's inside the previous candlestick. You see that? It's completed inside its previous candlestick. It shows you that your trend is going to continue its movement. And it's going to continue a downward movement. So whenever you see a candlestick that is completed inside its previous candlestick, and it has a longer upper shadow and a smaller body, and it's completed inside the previous candlestick where it's completed inside the trend, it tells you that you're going to have a decline. Is that clear? Yes. So any questions? No. All right, so another example. An example could be we don't have many examples in this market. Maybe it happens every 2 or 3 days in the 4-hour time frame. We have another example here. Look at it. So this has happened here. This candle has a long shadow and it was completed inside its previous candlestick. So it continues the trend downward. Or another example is this. And you have another one here. It was completed inside its previous candlestick and it has caused a continuation of the downward movement. But the shadow is long. Yeah, but it was completed inside its previous candlestick. So it has continued the downward movement. If the lower shadow is longer than the upper shadow, and it was a little bit longer than the trend from the bottom, that is a reversal candlestick. So don't be deceived by them. There are many examples in the market. So if you look at this one, this is the opposite of that. So can you see this candlestick? The one that looks like a reversal candlestick. You mean this? No, I'm going to draw a line and highlight it for you. I mean this. This. So it looks like a reversal candlestick. And it has caused the downward movement. Is it a reversal candlestick? No, the upper shadow is longer than the lower one. When the upper shadow is longer, it's a reversal candlestick. I see. I see. You're right. Another one. But you see, Sometimes there are candlesticks, for example, exactly where your pointer is. And you get the descending signal from them, but then we've had an ascending signal. No, these are your where your price is stuck between resistances and supports, but it was eventually performed. When your price isn't able to go further than the shadow from the top, that is a reliable candlestick. I got that. So you have to wait to see if it goes further than that or not. So we lose because we start trading too quickly, right? Yes, you start trading too soon. For example, in here, the upper shadow is longer than the lower shadow. But it has been performed because it was a bullish candlestick. And it was completed inside an open close candlestick, an open close pivot. But it was performed. So I think it's very important if it's bullish or bearish. Yes, that is a very important confirmation for you. So you learned about that too. When it's like that, if it's inside the previous candlestick, it's a continuation one. And it could continue an upward or a downward movement. So let's move on to the manual GAN technique. It's a very good technique for analysis. So this technique is in longer time frames, usually 4-hour time frames or more. So you have to have a swing high at the top and a swing low at the bottom. So you have to have a minimum and a maximum. Your maximum is your swing high at the top and your minimum is your swing low at the bottom. So in here it's the same. We have from top to bottom, and you draw it from every single swing high. So you connect all of the swing highs that you have together. So for example, in here, I connect the swing high to this, and then I connect it to my next swing high. The next one is right there. So right now I'm only connecting it to the ones that are equivalent to it, the ones that are upward. And the next one is here. And this is another swing high. So these are my swing highs from the top. From the bottom, let me see if I have drawn it right or not. Alright, I was just testing to see if it was accurate or not. So from the bottom, I have the swing lows and I connect them to the swing highs there. I'm connecting them to these points here. So let's move on to a shorter time frame. If you have paid attention to it, we have kind of a diamond shape here. So the lines that we have here, let me adjust the time frame. So the walls that are here are resistance walls. So there are some places in the market. Let's move backwards in the market to see what has happened in the past. For example, in a longer time frame, let's draw the lines. I'm not going to connect them to these points here because they're too low. So this is my swing high at the top, and I'm going to connect it to every single one of the fractals that I have here. Each of them represent a swing high. And you have to be very precise and accurate. So I have connected to any fractal that I have seen, and from the bottom I do the same thing. Do you understand what I'm doing? Yes. So take a look at this. The prices have had fluctuation in these walls. If you want to adjust it, okay, so whenever the price breaks the lower wall here, you see the candlesticks are on the line right now. So it's not broken yet. They're on the line yet. Can you see it? Or in the past, you see that the price has reached this wall, but then it has declined. But these walls here have stopped the price, but it has broken them and the next resistance has stopped it. So when this wall is broken completely and the top candlestick starts to work, you can consider taking orders when the price reaches the top wall there. So you have a diamond shape here. This diamond shape are your resistances. Is that clear for you? Yes. Uh, it's a little bit difficult to draw. Yes, you have to be very precise. It's easy, but it needs a lot of attention. So whenever you see a fractal here, you have to connect the swing lower swing high to that. So you see we have diamond shapes here. So when the wall is broken from the bottom, I know that I have to start buying at the top walls there because these are my resistances. For example, in here, when I have a kind of a crossover here like this, can you see it? In those points, we have the most powerful resistances. So when the price hits this crossover here, it means that we have a very powerful resistance there and we're going to have a lot of decline there. So for example, right here, or this area here, anywhere you see a crossover, these are the points where you can trade on easily. For example, in here, I have the resistances here. So whenever I get the confirmation and the price breaks them completely, and I get the confirmation from the next candlestick, and I know that my price is above this diamond shape here, I can start buying and put my target in the next pivot. But here, the next candlestick, when it has started to get completed, it is on the line or below the line here. So they're on the line. You can't say that it has been broken completely. It has to go past them completely. Is that clear? Yes. Another example, let me draw it for you. This is your single at the bottom that I'm going to connect to my fractals and my swing lows. You see, when I'm drawing this, this is a resistance area for me. And I'm going to do the same thing from the top. I'm going to connect these together. So, is this accurate? Well, if it doesn't perform, that is the breakout of a line. So, these represent your resistances. So if you have paid attention, the line that I'm drawing right now, it overlaps the resistance that I have at the top here. So the price is stuck below this here. If I zoom in, this is the price, this is the zone that my price is at. And it's close to a crossover too. You see, these are very powerful zones. like this and this one. So if I adjust it here, it is probably going to reach this place. So for example, when you see that your price is at the wall here, you shouldn't sell, because this is a resistance line for me. So the price is going to go up again. So in here, the line here has been broken, and the candlestick there has given me a confirmation that I have to open an order and then close it at the top wall there. Or let's move on to another chart. In the daily time frame, this is one of the lines you can draw. I'll connect these two. You see, I have connected it to this point. I have connected it to this one, but it has overlaps the other one there. So pay attention that these lines that you are drawing represent your resistances. So I am connecting every single swing high together. So if the breakout here is confirmed, the price has to reach the next wall from the top. So if the candlestick here is completed and the next candlestick starts to work, my next target is here. The price is going to reach that point. You see that how it has been performed? This is your third collision, and it has caused kind of a breakout, and it's going to reach the next resistance. So this GAN technique here, if I want to do this technique, should I also pay attention to my other methods or not? You have to mix all of the strategies together. So if I use this, for example, above this here, I have a pivot here. Exactly. Okay. You have a pivot here. Where do you have the pivots? You see, this one here hasn't been formed yet. So you've had a pivot here. No, I highlighted this area. So you mean this? Yes, in here. And a little bit above that. Maybe it doesn't even reach the top line there, and it is completed below this pivot. No, you see, if the second candlestick is completed there, we can say that it has been broken. So you can start buying there, and you've had a little bit of a decline, but that's okay. But it hasn't gone past my pivot yet. You see, I have a pivot below it. Is that correct? So my next target is this pivot here. Is that correct? So we should still pay attention to the pivots, right? Yes, exactly. You see, between these diamond shapes here, you have fluctuations, and the fluctuations are the pivots that I taught you. See, for example, in here you've had a swing low pivot. Is that correct? Or in here, the retracement that we've had at your trend line was because of your pivots. You've had two pivots and another swing low pivot there. So in here, the price has gone past your pivot, and now it's at this point where you have pivots. So it has reached the pivots. That is why it has declined a bit. But there is a large possibility that it's going to go up because it's in the new diamond shape. I'm not sure I get your question. No, you see, if this has gone further than this line here, we can interpret that it's going to go up. Yes, that is kind of a confirmation for you, and it helps you. But please keep that in mind. Whenever you have a crossover here, these are your most powerful resistances, and when your price reaches them, it is definitely going to have a reversal. For example, in here, you've had a crossover and another one there. You see, the lines have gone over each other. You see that? It has been performed very beautifully. Or in here, I have connected these 2 points together. Let me find it. Oh, right here. So I have connected these 2 points together, but this point here is also in its way. So you have to draw them very precisely and accurately. Is that clear? Can you hear me? Yes. Yes, I can hear you. So you have to draw these lines very precisely. If you make a little bit of a mistake, it's going to cause errors. So I have probably made errors here myself. So I have to adjust this line here. That it's exactly at the tip of this one. You see that? Now it's adjusted. Alright, so this is the GAN technique. It can help you a lot. In the longer time frame, you have to draw it. And it's a very good technique for your long-term trading. And I can talk more about this, but first you have to practice it and master it. And then I'm going to talk about it again. So I have a question. In the euro dollar you have bought here, why didn't you put your take profit in the top wall there? No, you see, I told you that we have pivots in between these diamond shapes. You see, for example, I have a pivot right here. It's a swing low here that has caused a reversal. So I'm going to take my profit and then exit and then enter again. I can put my take profit at the top wall there. And I can find the pivot that I have here, which is this. This is my next pivot. So the price could go past this and break this pivot here and reach the next pivot, which is in this area. So I definitely have other pivots here too. I have one here. This is a open close pivot in this area. So in between these diamond shapes I have pivots. So when I have that, I have to put my take profit in the pivots and then exit the market in those areas. So this is just a tool that helps us, but we can't rely on it completely. We can't just use this technique alone. If you just want to use this technique, you can just use the walls of it. But you can mix it with candlesticks and you can get a good result. For example, in here, this candlestick, this is a swing high candlestick at this wall here. So you know that you can buy. You can start buying. I got it. So that is how you can use it. But please practice it more so you can master it. And next week I'm going to talk about how you can trade based on it and how you can put your take profit and stop loss based on this technique. Any questions here? No, thank you. Alright. I will send you the video until the next session. And that's it. Thank you so much. Thank you. Good night. Goodbye.